All right, we'll get going soon. We're not far from the ECB announcement, and then we got a press conference. Yep. All right, BRB, go ahead and answer the poll. All right, we're almost there. How you doing? Good morning. We are 37 and just under 38 minutes until the actual press conference. All right, so how you doing, eh? All right, so I guess we're good enough to get going. Where do I have the chat? There's the chat. Okay, so we'll We'll mark this as the beginning. Welcome to Forex.Today, the YouTube community of more than 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance. Now, why would we do that? Well, because trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. All right, so we have an ECB meeting. Interest rate decision is imminent in a bit. I keep looking at my microwave. 8 minutes. Yeah, okay, let me do that. All right, that should be better. Grumpy Cat, I think. Base boosters on. How about that? I think that's probably an improvement. If that doesn't work, then I have another thing that I could do and see if that fixes things. Okay, so we have our decision, and then we have the press conference. Yeah. Oh, that is better? All right. Now, if you could, please answer the poll. Well, it looks like actually you did. Everyone's actually answered the poll. Okay, so why don't we just end her? Let's end her here. And people say no. So I've done some research. Would you like to know my research before the event comes out? I'm assuming you will. Hang on. I got to know. Yeah. Where is my research? Where did it go? Okay. So looking at the 4-hour trend of euro dollar over the last several ECB meetings. Okay? So when you look at the ECB announcement relative to expectations, okay? So December 14th, as expected. October 26th, as expected. September 14th, they rose by 25 basis points. Okay? July 27th, the same. June 15th, the same. May 4th, the same. March 16th, the same. February 2nd, the same. December 15th, 2022, the same. October 27th, 2022, the same. September 8th, 2022, the same. July 21st, 0.25, unexpected. Okay. So that's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 12 ECB interest rate announcements. Would you consider that a reasonable sample size? Okay. And then if so, then I'll tell you the end result of your no 70%. Ha, Diago, come on, seriously? What do you think? Okay. Nobody answered the question, which is kind of funny. So, do you want to know the outcome of the last 12 ECB meetings? If the answer is correct, no, 70%. Okay. Every time it came out as expected, 70% of you guys said no. 100% of the time, the euro dollar fell over 4 hours. Okay. So then, so over 4 hours. So that would be 4 candles down. Now, if there's a risk off mood arriving, that's the longer term strategy. But what this is saying, this research is suggesting is like, over the next 4 hours, maybe it drops down to like this, or maybe even a slight lower low. So I think what I would do is take tomorrow's target and make it today. Maybe ridiculously good for the news, meaning, there we go. So of the two surprises, September 14th, the ECB surprised everybody and raised interest rates. And July 21st, 2022, there was a surprise raise above consensus. Those 2 times the euro dollar went up. The other 10 times the euro dollar went down. So who knows? Thank you, Flash. So we'll see what the outcome of this ends up being. Trying to make this a little arrow. I'll get this one out of the way because it's longer term, so we don't need to be distracted. So it'd be interesting to see what happens, huh? Yeah. So let me ask you, is that helpful information? I want to know. 10 out of 12 times it was as expected, euro dollar fell every single time. But if there was a surprise rate hike, euro dollar went up. Now we're only analyzing the next 4 1-hour candles kind of thing. Right on. Well, it's nice that I have the info, huh? So I don't know the future, though. I just know the past. Of course, I just had, a tool to do the work for me, which is nice. Because I could also tell you what every other major currency pair and cross pair and asset did during those same ECB releases. Hang on. It's so strange. The last several days, maybe the last couple of weeks, it's been freezing cold. My swimming pool had ice on it. And then last night I went to take the recycling out to the street, and it was super ridiculously warm at night. It was like a spring day. We went from 20 degrees to 60 degrees in the same day. And now there's a fog over the lake because it's so warm. What a world, what a life, I'm in love. All right. So far, so good. The first part, right? We had the vol on the news release and then the instant give back. So I wonder if we can get down to 108.50 today. Who knows? Is that right, Highlander? Yeah, Mickey's like, it's foggy up here. Seems like you guys lost a coach today. Cool. So anyway, so far so good. What else going on in the world of euro? That could get pretty interesting. I already have it all marked up. That's kind of interesting, huh? Wonder if that's going to hold. As you probably know, it probably only gets you a double bottom, but that might turn out. The reason I'm not making it a lower low is kicking off the 55 makes you vulnerable to the double bottom. University of Michigan, Wolverines. He gone. I think he's moving to LA. Yeah. What was he making at Mitch? What was he making there? $7 million a year? Well, now he's probably making $25 million a year. That's how it goes when you win. Silver and oil. Yeah, okay. Sure. Why not? We're waiting. We're waiting. So I'll go to metals. Oh, is that right, Claudio? Yeah, I bet. All right. Let's do silver. Okay. This is retail gold. Poor man's gold. All right. Cool. So if you're going to play it, let's even go out to a daily, I suppose. You can see I've already got it, okay, generalized as no trend. So there's generally no trend, but we're at the lower bounds of the nothing. Okay, the moving average on this time frame is irrelevant because we're moving sideways. Okay, there's no directional trend. So, you might be able to play options, right? Make an options play. But nonetheless, this probable, this maybe. But really nothing going on. There's much better things to do with your money, most likely. Okay. Okay, cool. Okay. Now we can break this down into a smaller piece. So at 23, we have resistance, right, up in here. And I'm testing an AI tool that will analyze this for us, or has already analyzed it for us. So it's going from that low. Okay. And let's see. So what did the AI say on silver on a smaller time frame? I have to find my drawing tool. Oh, here it is. Okay, delete. All right, so AI on a 15-minute chart. I guess I'll bust it out as a 15-minute chart, just so it's about the same. And then you got to zoom in. So the AI does a lot of day trading and a lot of what I would call not quite scalping, but definitely day trading. And so as an investor in silver, I show you like, oh, the market's sideways. Now the AI says, no. When you get to the 23 area, and this came out, it analyzed this, oh, recently, like an hour ago. So we were up here. All right, so it suggested 2281. 2281. Where's 2281? Let's do it that way. Oops, turn that off. 2281. 2281. 22. Is it down here? Oh, we're on 2281. All right, 2281. Did I get that right? And the stop at 2293. See, I'd put it above 23, but whatever. Oh, well, that's basically it there. Okay, that'll work. And 2271. See, that's a small scalp. 2271. Here. Okay. So an hour ago, it said get ready for something like this. In the course of 5 hours. And it's really actually looking at it more like this. It's thinking that. What are your thoughts? Would you agree with the AI or disagree? For scalping silver over the next few hours. So it's an intraday trade. It says you should hit the target within 5 hours. Agree or disagree? Oh, it looks like it came up with it at 7:30 a.m. What is it, 8:30? So an hour ago. So an hour ago, it came up with the idea. So this is 15 minutes, 30 minutes. Like, what time is it? Yeah, actually, it it was an hour before the current candle. So it was, so that's the current. So 15, 30, 45, 60. Yeah, so it saw the kickoff here and it said, so yeah, get ready this way. And yeah. Yeah, it's just AI. I mean, Buster says disagree. Yeah. Certainly you can disagree with it for sure. But it's such a small term trade, right? But it's obviously noticing that that's a top. And it must be thinking about it's wimped out here and the trend line is here. So it's basically a regression, isn't it? There's nothing wrong with it technically, and it only knows technicals, Foster. So it's not thinking fundamentals. It's not thinking about the ECB. It's just saying in this situation, it's seen situations like this before. That's what AI does. It says, look, I've seen silver do patterns like this before, and this is what's happened. Oh, we just hit target. So that's the GDP coming out, right? All right, we just hit target. AI was correct. You're done. That scalp was correct. Huh. All right. Well, there you go. Oh, well, there you go, eh? Oh, for sure. Ha! And look, and it stopped. It stopped. And it has no other opinions. Wait, I'm looking. Oh, okay. So now, who said they were bullish? Let me pull it back up. All right, Foster O'Neill, Christian Corintang. All right, disagreed. Okay, probably a time frame issue. So the same AI says on a hourly chart, it sees it as a buy. And it says 2288. 2288? Where's 2288? I'm going to have to do this in a completely, let's do this in a completely different template. Simple. Okay. All right. So it now on the hourly chart, over the next day, my AI says 2284, 2284. So we just got the bid. So we're right on that now, 2284. Stop 2272. 2272. Ooh, that's a tight stop. 2272. That's a tight stop. Yes, yeah, I don't like that, but oh my God, that's such a scalp. It's such a scalper. Target 23. So just back to the top of the range. How interesting. Yeah, I'm such a bigger picture dude that like, I'm like that, really? All right. And hourly chart, you would have said the vol would have helped you buy the dip. And now you let it rip up to 23. So it was nice to know both sides of that trade. Interesting. So there you go. It's interesting to have the data anyways. They're not conflicting, as you know. One's a scalp, vol scalp down, and the other one is still an intraday day trade type thing. So I would switch this, like the way I like to look at it is like you could do a day trading bullish bias and oops, you end up getting the same thing. You're like, oh man, if I only had magic AI. Well, dude, you're just supposed to be doing your job. So a bull has exactly the same trade plan. Look at that. That's just a basic day trade. So in that case, basic technical analysis would concur with the AI, but the AI is not doing that. The AI is doing a wedge channel is what it's saying. A rising wedge channel is what the AI saw. But I can't see what on the hourly. Where does it see that? Oh, it's only looking at this much. Hang on. It's looking at it differently than I am. So it's got this and this. This is what the AI is thinking. All right, whatever. It must. I think it's actually connecting these upper wicks, so we'll call it that. And if it's connecting the upper wicks, it's going to connect the lower wick. So, all right. That's what it's thinking. All right. Yeah, I don't really trade that way, but we get to the same conclusion. So, interesting. So we are 10 minutes, 12 minutes away from the ECB meeting. Cool. Euro is weakening here. This is euro versus everything. So I've created a euro index. Dakar says February. Well, seasonally, it would be close to that. Is it actually February? Well, it could be middle of March. But yeah, I follow your thoughts. Yeah. So that music you hear is the ECB. Or as they say in Canada, the ECB, eh? Somebody said to me 2 days ago, she said, "Are you Canadian?" I said, "Oh, for sure, eh?" Oh, for sure. For sure. Yeah. For sure, eh? Oh, is that right, eh? Yeah. Yes, Mr. Wright, of course. Of course it is. For an upgrade of only $199. No, just joking. No, it's included with the $88. Yeah. ECB giving back right now. RGY, are you from Saskatchewan? Dundurn, no way. Right on. I'm the one from Dundurn. Yeah. I've forgotten where that is, actually. Maps.google.com. Dundurn, Saskatchewan. Yeah. Let's bring it up. Yeah, I think we did that before, didn't we? We did a walkthrough. Where? I just want to... Oh, down there. Yeah, for sure. Yeah, on the way to Regina. Yeah, okay. I don't know that way that much. I never really went out that way. Yeah, definitely know it. Oh, yeah. Well, of course, Blackstrap. All right. Yeah. Okay. Yeah. Yeah, Blackstrap. No way. That's where I learned how to ski. Right? There's a ski hill there, isn't there? With Blackstrap. Yeah, I know Blackstrap. Come on, ECB. We got a good 6 minutes yet. Looking at Google Earth, it doesn't show any ski hill. I must be thinking of a different place for the skiing. But I definitely know Blackstrap. Yeah, there's no indication of a ski hill. Must be looking. Where was I thinking? Well, it would have been the river, not the lake. Anyways, yeah, Blackstrap. Very cool. So, yeah, so the question is... does Bootcamp give you annual pivot points? Template, right? And you go to yearly. Okay. So a bear would be doing this in 2024. A bull would be doing this in 2024. And in reality, nothing's happening. So you could say basically last year nothing happened. And so you could argue an inside month where you make this your range. So now you have to decide what you think. Oh, is that right? It's gone? Wow, no way. Huh, well, there's a young Wayne ghost. Where that mountain used to be. Huh, look at that, I lasted longer than mountains. Oh, flood alert today. All right, we're getting pretty close to the ECB. I can't even find where the music's coming from. Oh, ECB, where did I put you? Okay, now I got double redundancy. Okay, I gotta find out where the other ECB is. Not there, not there, not there. So not that window. Not that window. Not that window. All right, this is gonna get interesting. Where in the world is it coming from? Okay, none of those pages. Oh no, it's starting. I don't know where this music's coming from. Trader's Way, eh? All right. I don't know where this news is coming from. Or this music. I have so many windows open today. Where the heck is it coming from? Oh, I found it. All right, so I'm going to kill that. Well, I'm going to just mute it. I might be able to use this one and not the other one. Yeah, let's do this. I'm just going to pop it. I'm just going to pop it up here and overlay it instead of doing the other way. So new browser source. Stupid YouTube pops an ad over it. Cool. You guys good? Everybody good?
Good afternoon and welcome to the ECB press conference. Joined on stage here by President Lagarde and Vice President de Guindos. We are also
He's such a party animal, this guy.
Video link to some journalists outside of here. So if you turn on your cameras and your microphones when you speak, please do so when you take the floor. By the way, my name is Wolfgang Preußel, and with that, I would like to hand over to President Lagarde, please.
Thank you very much, Wolfgang, and Happy New Year to all of you. We haven't seen each other since the beginning of the year, and I know it's getting late, but still time to do so.
She had COVID, remember?
The President, the Vice President and I welcome you to our first press conference in 24. The Governing Council today decided to keep the three key ECB interest rates unchanged. The incoming information has broadly confirmed our previous assessment of medium-term inflation outlook. Aside from an energy-related upward base effect on headline inflation, the declining trend in underlying inflation has continued, and our past interest rate increases keep being transmitted forcefully into financing conditions. Tight financing conditions are dampening demand, and this is helping to push down inflation. We are determined to ensure that inflation returns to our 2% medium-term target in a timely manner. Based on our current assessment, we consider that the key ECB interest rates are at level that, maintained for a sufficiently long duration, will make a substantial contribution to this goal.
Yeah, it will.
Our future decisions will ensure that our policy rates will be set at sufficiently restrictive levels for as long as necessary. We will continue to follow a data-dependent approach to determining the appropriate level and duration of restriction. In particular, our interest rate decisions will be based on our assessment of the inflation outlook in light of the incoming economic and financial data, the dynamics of underlying inflation, and the strength of monetary policy transmission. The decisions taken today are set out in a press release that is available on our website.
Look at the vol on your silver
I will now
trade.
outline in more detail how we see the economy and inflation developing, and will then explain our assessment of financial and monetary conditions. Looking at the economic activity, the euro area economy is likely to have stagnated in the final quarter of 23. The incoming data continue to signal weakness in the near term. However, some forward-looking survey indicators point to a pickup in growth further ahead. The labour market has remained robust. The unemployment rate at 6.4% in November has
Everyone
fallen
else is
to the
3.5.
lowest level since the start of the euro, and more workers have entered the labour force. At the same time, demand for labour is slowing, with fewer vacancies being advertised. Governments should continue to roll back energy-related support measures to avoid driving up medium-term inflation pressures. Fiscal and structural policies should be designed to make our economy more productive and competitive, as well as to gradually bring down high public debt ratios. Structural reforms and investments to enhance the euro area's supply capacity, which would be supported by the full implementation of the Next Generation EU programme, can help reduce price pressure in the medium term while supporting the green and digital transitions. Following the recent ECOFIN Council agreement on the reform of the EU's economic governance framework, the legislative process should be concluded swiftly so that the new rules can be implemented without delay. Moreover, it is imperative that progress towards capital markets union and the completion of banking union be accelerated. Turning now to inflation. Inflation rose to 2.9% in December, as some of the past fiscal measures to cushion the impact of high energy prices dropped out.
All right,
of
she
the
hasn't
overall
said anything
inflation
yet.
rate, although the rebound was weaker than expected. Aside from this base effect, the overall trend of declining inflation continued. Food price inflation dropped to 6.1% in December. Inflation,
Still no trend.
including energy and food, also declined again to 3.4% due to a fall in goods inflation to 2.5%. Services inflation was stable at 4%. Inflation is expected to ease further over the course of this year as the effects of past energy shocks, supply bottlenecks, and the post-pandemic reopening of the economy fade, and tighter monetary policy continues to weigh on demand. Almost all measures of underlying inflation declined further in December. The elevated rate of wage increases and falling labour productivity are keeping domestic price pressures high, although these too have started to ease. At the same time, lower unit profits have started to moderate the inflationary effect of rising unit labour costs. Measures of shorter-term inflation expectations have come down markedly, while those of longer-term inflation expectations mostly stand around 2%. Looking now at the risk assessment. The risks to economic growth remain tilted to the downside. Growth could be lower if the effects of monetary policy turn out stronger than expected. A weaker world economy or a further slowdown in global trade would also weigh on euro area growth. Russia's unjustified war against Ukraine and the tragic conflict in the Middle East are key sources of geopolitical risks. This may result in firms and households becoming less confident about the future and global trade being disrupted. Growth could be higher if rising real incomes mean spending increases by more than anticipated, or if the world economy grows more strongly than expected. Upside risks to inflation include the heightened geopolitical tensions, especially in the Middle East, which could push energy prices and freight costs higher in the near term.
That's
hamper
Baltic Dry
global
Index.
trade. Inflation could also turn out higher than anticipated if wages increase by more than expected or profit margins prove more resilient. By contrast, inflation may surprise on the downside if monetary policy dampens demand by more than expected, or if the economic environment in the rest of the world worsens unexpectedly. Moreover, inflation could decline more quickly in the near term if energy prices evolve in line with the recent downward shift in market expectations of the future path for oil and gas prices. Looking at financial and monetary conditions now. Market interest rates have moved broadly sideways since our last meeting. Our restrictive monetary policy continues to transmit strongly into broader financing conditions. Lending rates on business loans declined slightly to 5.2% in November, while mortgage rates increased further to 4%. High borrowing rates, with the associated cutbacks in investment plans and house purchases, led to a further drop in credit demand in the fourth quarter, as reported in our latest bank lending survey. While the tightening of credit standards for loans to firms and households moderated, they remained tight, with banks concerned about the risks faced by their customers. Against this background, credit
It's the same
dynamics
price,
improved
but different
somewhat,
behavior depending
but
on
overall remain weak.
breakout or not.
Loans to firms stagnated in November compared with a year earlier, after contracting in October, as the monthly flow of short-term loans rebounded. Loans to households grew at a subdued annual rate of 0.5%. So to conclude, the Governing Council today
All right, we're getting
decided
to the real
keep the
news
3-key
now.
ECB interest
I mean, they
rates
actually
unchanged.
released the speech, so we already know it.
We are
Just let's
determined
do the
to ensure
Q&A.
that inflation returns to our 2% medium-term target in a timely manner. Based on our current assessment, we consider that the key ECB interest rates are at levels that, maintained for a sufficiently long duration, will make a substantial contribution to this goal.
John, are you talking about
Future
the
decisions will
meeting
ensure that our
on
policy
February
rates
5th?
will be set at sufficiently restrictive levels for as long as necessary. We will continue to follow a data-dependent approach to determining the appropriate level and duration of restrictions. In any case, we stand ready to adjust all of our instruments within our mandate to ensure that inflation returns to our medium-term target and to preserve the smooth functioning of monetary policy transmission. We're now ready to take your questions.
Thank you, President Lagarde. And the first question goes to Mark Schroers of Bloomberg. Mark, please.
Yes, thanks a lot for taking my questions. The first one is on interest rates. Last week in Davos, you said that you consider it likely that interest rates will be cut in summer, after some of your colleagues already had given similar guidance. Did you discuss the possible timing of an interest rate cut at today's meeting, also in light of the weak economic data we got from Germany this morning? And if not, if you didn't discuss it, would you stand by your remark from Davos? Is it likely that we will get a cut in summer? And does that mean that, at least from your point of view, March and April are off the table? And the second one is on geopolitical risk, and in particular the Red Sea shipping turmoil. You recently mentioned a possible comeback of supply bottlenecks as a key risk factor for inflation. You also mentioned it today. And your colleague Robert Holzmann even warned that rate cuts in 2024 can't be taken for granted because of these risks. Given the most recent developments, the ongoing tensions in the region, has the Governing Council become even more concerned about it? And how would you react if risks materialize? For example, if inflation picks up again due to higher shipping costs or new supply chain disruptions? Thank you.
Well, thank you very much for your series of questions.
She's so
first
good.
of all,
She's so good.
the consensus around the table of the Governing Council was that it was premature to discuss rate cuts. And in addition to that, I typically stand by my comments. So the comments I made to your television channel, Bloomberg, I certainly stand by them. I'm not sure that I would exactly characterize them as you have, but I stand by what I have said, not what others have commented that I have said. One other thing which was very much the consensus around the table was that we had to continue to be data dependent. So rather than being fixated on any kind of particular calendar, which would be being date dependent, we reaffirmed our data dependency. And I have flagged in the course of the monetary policy statement some of the areas that we will be particularly attentive to in the course of the next few months. You specifically addressed the issue of the supply bottlenecks. I would be maybe a bit cautious about the use of supply bottlenecks because it was very much associated with the consequences of COVID and the multifaceted bottlenecks that we observed, both in shipping, in port handling, in dispatching of containers, which was really a very sizable disruption in the whole logistic chain. But we are observing very carefully because we are seeing what you are all observing, which is that shipping costs are increasing, delivery delays are increasing, and while we all know that there is more shipping capacity than there was in 2020 and 2021, we also know that costs and fees are increasing. Now, it does not, I think most observers agree to say that it has a moderate impact. The percentage of the water shipping freight is a little north of 1.5% of total cost transported. But we are being very careful and look attentively to the developments, and it's pretty clear, and I think whether you look at the IMF, the OECD or other commentators, if the conflict in that region was to develop further, clearly that would be an additional risk, whether it's a question of the disruption of shipping that we alluded to, or the price of energy and commodities at large. Thank you.
Thank you. And the next question goes to Annette Weisbach of CNBC. Annette, please.
Thank you very much. President Lagarde, I have a question on, because you always refer to wage data. So there's loads of wage data around. So what are you actually really looking at? And is there a cutoff point in the coming year? Because clearly we can look at wage data throughout the year. And then I would like to again bring you back to that before summer decision thing. June is a good timing, isn't it? Because you have a new round of staff projections. So in case inflation outlook would materialize to be lower than which we have it now, would that mean, would give you more ground to actually cut rates? Thank you.
Well, thank you very much. So thank you for your question on wage, because as you have noted, it is an item that we're going to look at and that we have looked at very carefully, as we are also looking very carefully at profit unit and the link between labor unit and profit unit, which was one of the key assumptions we had under our baseline. I remind you that the baseline we had was that wage increases would gradually over the course of time be absorbed by a slight reduction, gradual reduction of profit unit, and that's exactly what we are seeing. It's often said that wage indicators are backward.
So a big GDP,
yes,
3.3?
there is a whole battery of backward-looking indicator. For instance, the latest, I think it's the per compensation employee data that is available, dates back to October. So what we have in addition to that is indices that we have built over the course of time, one of which is actually originating from Ireland. So our chief economist, Philip Lane, was at the origin of that one, which is the wage tracker, which receives almost live any change to negotiated agreements in particular. And we receive that on a constant basis. The other indicator, which also is important, not so much in relation to wages, but in relation to the tightness of the labour market, is Indeed, which gathers all the vacancies advertised, particularly on internet, and that informs about the tension of the labour market, and of course is telling us a little bit where we are heading in terms of that tightness, which itself result in a position of strength in the negotiation for one party or the other. And we are seeing those indicators at high level. What we are also seeing on the wage tracker is stabilization, which explains the comments included in the monetary policy statement. And Indeed, we are seeing also a slight reduction of the volume of vacancies that are advertised. Now, we take all this data, at face value, and we try to constantly corroborate them. We do that with the national central banks, observers and economists, to make sure that we really canvass the 20 member states as accurately as possible. But it's not elusive, because really we're trying to pin it down, but it requires that we look at it from multiple angles to make sure that we are as accurate and as up to date as we can. Being forward-looking is not an easy one for wages, but just to give you an idea, I think it's 40% of the employees covered by our wage tracker, which have had their employment contract
9:05, so about 25 minutes till they open to trading.
in December, not terminated, but probably renewed without new terms of salary levels at December, and there is and so the 40% include those whose terms and conditions have expired and must be renewed at the end of December, and those for which the same will happen in the first 3 months of 24. So you have 40% of the workforce of whom salaries, wages, one-off payments are yet to be determined and will be tracked by
my oil trade's going.
This information
Come on,
will
make
come
a
in the
higher
course of
high.
the next few months, which will be, of course, really rich in information.
Daily target
to help us better
just
understand
above all
where
that
we are
resistance.
on wages.
76.
As I said, we are data dependent, and we make decisions one meeting at a time.
So I'm up over
So
$1
what we have
on
done in the course of this
WTI.
meeting today is we have confirmed our inflation outlook, and we consider that the information that we have received in the last few weeks since our December meeting show that the medium-term inflation outlook is broadly following the path that we had projected in December. That's point number one. Point number two, we look also very carefully at data concerning underlying inflation. And here we are seeing a decline across the board of pretty much all our indicators except domestic inflation. We also look carefully at inflation expectations. That was also, those were a few weeks which were rich in information, where we have seen that both the market-based and the survey-based inflation expectations are also, both in the short term and for some of them also for the medium term, really coming at around our 2% target. And of course we look at the latest inflation numbers, and you will have seen, all of you, that the December number was 0.5% north of the November number, which was this 2.4. But we had expected that upside, which was caused by base effects, largely attributable to German measures. It was weaker than we had anticipated, but it was totally predicted, and it does not detract from the view that we have that the disinflation process is at work. And of course we look, sorry, I should have mentioned that because I mentioned the inflation outlook, the underlying inflation. Of course we look very carefully at the strength of monetary policy transmission, and here again we had some good data and information, notably from the bank lending survey.
Thank you. And the next question goes to Ord Kozulek of BFM Business. Ord, please.
Thank you for taking my question. Your data dependent to this data on wages that won't be published before late spring. Don't you think this could lead to cut too late, if not before June? And could you explain more about the word premature when you speak about rate cuts? Does that mean that Council has spoken about cuts?
I think it's I'm not going to elaborate much further on that. All I can say is that the consensus around that the table of the Governing Council this morning was that it was premature to discuss rate cuts. It's as simple as that. You had another point on wages and publication of wage numbers. We will have a lot of information coming in the next few months. So we will have our projections in March. That's a big set of information.
And that's where QuantBox gets updated.
Which lead us to
so we get new projections in QuantBox.
We will receive 2 inflation monthly data for January and February before.
So here's my Euro report.
And then we will continue to receive additional data, and you're right.
So this will get updated in March.
Later. But we look at the whole range of data. It's not just, we're not only focused on wages. We are clearly interested in wages.
This is the ECB research.
Component of service.
This is the same information she uses.
In the breaking down of inflation, which is still quite resistant and stayed at 4% from December to November. It's the only item that has actually stayed at the same level. Thank you.
Thank you. Next question goes to Martin Arnold of the Financial Times.
So this goes all the way to the end of next year, 2026.
Firstly, just to go back to
you're welcome.
Growth and what you're looking at, is it fair to
everybody else guesses or has opinions?
The focus on wages means that you need to see wage growth falling before you're prepared to cut rates, or do you just need to see it stabilizing? What is it you want to see from this wage data that you're waiting for? And the second one is, if I could ask you a bit of a longer term question, where do you see the neutral rate? And do you think that the neutral rate has been pushed up?
She's not going to answer that question.
That we've seen over the last few years, or is it unchanged, or has it actually come down? What's your view on that? Thank you.
Well, thank you very much for the 2 questions. So on wage growth, I think what we are already seeing, whether you look at sort of past wage numbers, whether you dissect that in compensation per employee, in negotiated wages, taking on excluding the one-off payments, we are seeing a slight decline. So it's directionally good from our perspective. To your question, should it stabilize or should it decline? It's already declining, and clearly our hope is that the wage increase, because we're still seeing an increase, whether you look at numbers at 5.2% or 3.4%, depending on what measurement item you take, that these increases are sufficiently absorbed by the profit unit, as we are seeing it happening at the moment, so that it does not go into fueling inflation, which would create the risk of a second round effect, which we are not seeing for the moment. So the hypothesis that we had when we built the baseline of December, which was that profit unit would gradually come down as a result of dampened demand as a result of our monetary policy stance is actually happening. And there is a phenomenon of catching up for employees. It's also one of the reasons why we see growth coming up and the recovery beginning in the course of 2024 because of rising wages while inflation comes down, which will free up some purchasing power, which hopefully will stimulate consumption. Now, on your second question, I'm not going to answer your question, Martin, because the real answer is that...
Told you she's not going to answer that.
I'm not so sure, and it's the honest answer to you. I could play a game.
The question was, what is the neutral rate?
Maybe it's a little higher, but we're not going to know until we get to that point of the neutral interest rate. And as policymakers, I think it's our responsibility not to predicate, not to anticipate, but to make the right policy decisions in due course.
Hey, what's up? What's up, eh?
Medium-term target of 2%.
First timer, huh?
Thank you. And the next question goes to Silvia Berzoni of Class CNBC TV channel in Italy. Silvia, please.
Good afternoon, President. Good afternoon, Vice President. So the first question, given that markets' expectations are still optimistic, of course the ECB is data dependent, but would you say that the case for a rate cut in April is unlikely? And the second question is referred to growth again. You said that there are more downside risks, and if it's true that the path of disinflation is following your December projections, is it true also for growth? Thank you very much.
You know, we are in January, and the first quarter Q1 24 is going to end in March. So I think it's totally premature to anticipate what exactly will be the growth projection at our next meeting in March. We will come to that projection when we produce our projections in March. On your other question, I think in terms of an overall evaluation of our policy trajectory, which many of you are after, we need to be further along in the disinflation process before we can be sufficiently confident that inflation will actually hit the target in a timely manner and at a sustainable, in a sustainable way at target. So it's a disinflation process in which we are. It is working, but we need to be more advanced and we need to be further along in that process to be confident that inflation will be at target sustainably so. And I'm giving you a little indication about what I call...
This is the capital stock and flow
forward guidance. It's
of euro versus dollar, and then the actual euro-dollar price.
Apply in our considerations when we look at data in the next few weeks.
Thank you, Madame Lagarde. Also, we'll give the next question to Francesco Canepa of Reuters. Francesco, please.
Good afternoon, everyone. My first question is about why did you take out a reference to sustained under domestic price pressures from the opening statement, and also a reference to unit labor costs? And the second question is about a survey the staff union published earlier this week, which showed that some staff are unhappy with you as a leader. So what do you plan to do to win them back?
Dude, I don't like this guy.
On the issue of omission here or there, I think you should not be.
I think she should send out Will Smith.
What stays in. There are some segments in the monetary policy statements that we are very keen to keep because they indicate the principle on which we lay our monetary policy stance and that are the backbone of our discussions. Okay, but a word here or a word there, I would not give it too much of weight as such. We are trying, and you may have noticed that we are trying to be a little more simple in our expression, to use fewer words, to be more more normal in a way, and that sometimes implies that we change, sentence, the order of a paragraph versus another one. So don't pay too much attention to the deletion of one word or the other. On the other hand, when you see sentences or block of key points that are repeated on a regular basis, that means something. Okay? So, at the ECB, we have many surveys, and we actually conduct surveys in a very technically proof way that we can trust. And in the surveys that the ECB conducts, we typically ask staff whether they are happy to work at the ECB. Those surveys are responded to at a rate of about 60%, north of 60%. To that question, are you happy to work at the ECB? The overwhelming majority, namely 80%, say yes, I'm happy to work at the ECB. The second question that we ask also is, would you recommend to a friend to work at the ECB?
Am I almost on it?
Is overwhelming majority again.
Thanks for watching that.
North of 75%. And a question that is often asked as well.
Oh no!
Do you feel a mission associated to your work?
Yeah, you're right, man.
More than 90%.
76 is the. This is the conservative target, though. 76.39, profit target conservative.
Dignity at work.
I already have it
And we
labeled.
pay great attention to these technically sound responses, and we act upon them. And we will continue to do so.
It's already labeled,
Now,
Bubba.
what keeps me going is those answers. And I'm extremely proud of the staff of the ECB. And I'm very proud and honored to lead the institution. Because we are driven by a mission, delivering
Thank you, Ravi.
stability, but serving the Europeans. And we will continue doing that. That's my response to your question. Those are the surveys that I'm particularly attentive to and keen to constantly improve. Thank you.
Right on.
Thank you, Madame Lagarde. The next question goes to Stefan Rechius of Handelsblatt. Stefan, please.
Thank you for the floor. I have two questions here. I'm here. Two questions, if I may. The first one is on the divergence of inflation rates. Now, it's been there for a while, but now in some countries, inflation rates have fallen well below 2%, while other member states have way to go with regard to inflation rates to bring it down to 2%. So how big of a burden is that in terms of transmission of monetary policy, as well as regarding discussions in the Governing Council on the timing of rate cuts? And my second question is on spreads. Spreads of sovereign bonds have narrowed in recent
So
times.
Hong Kong's not moving
Is that
much.
good news? Are you pleased to see that?
On the US GDP
or,
news.
Are you
Too bad.
worried that markets have gotten ahead of themselves in that regard as well, assuming lower rates going forward? Thank you.
Come on, get up
Well,
there.
thank you for your question. You know, it's inherent to the euro area that we have heterogeneity, that we have divergences, and it does not escape any topic or any field that there is heterogeneity and differences and divergences. It's the case for inflation, clearly. It is the case for the type of lending terms that are offered to Europeans, whether you have a loan in Portugal or Spain.
I want to wear
or
a
whether you
giant
have a
tie
loan
like
in
the
France,
size of
when
her
you're a
scarf.
household,
I think that'd be
you're going
killer.
to have different terms applying to you. And that's what we have inherited from the euro area. It's what it is. And I can assure you that around the table, all governors come both in their respective capacity, having in mind their country, but also having in mind the whole euro area and determining the policy for the whole euro area. So we look at that carefully, but there is lots of explanations as to why, for instance, inflation was much higher in the Baltic states than it was in France, for example. But we obviously have to decide for the whole of the euro area, and the governors are riveted to that as an area of competence as far as they're concerned. Spreads is one indication of transmission, and of course we look at
Let's
those
go play in
carefully,
gold for a
but I'm
while.
not going to pass any other judgment in that respect. Thank you.
Thank you very much. And the next question goes to Andres Stumpf of Expansion. Andres, please.
Good afternoon, Madam Lagarde. Can you give us any updates on the state of the monetary framework revision, and how will this be on the future? How important will it be on the future decisions that the ECB will have to make along the year? And a second question, if I may. Now that the Fed is letting expire its emergency liquidity lines for banks, do you fear that given the tight financial conditions...
They were front-running the Fed on that.
Some of the tensions on the financial system that we saw...
There was an arbitrage that people were doing.
Thank you very much for asking for the update on the operational framework. So what I can tell you is that work is advancing at a very fast pace. Many of our teams are working very hard. It's a technical, difficult issue which has many ramifications, and of course where there are different options. I think we are narrowing down to what will be optimal for the perspective of our market, which is, as we just discussed, which has heterogeneity and large differences between the member states. We will most likely, I have to take some precautions because work is underway, but we most likely will be done by the end of spring. That's my guess estimate. And will it matter significantly for the short term? Not necessarily, because we start from a balance sheet size which will not require that the operational framework principles that we will decide collectively at the Governing Council level will have an impact in the very short term.
Thank you.
And on emergency line and the risk that we see on you're talking about the US market here. I wouldn't want to pass judgment, number one, and I have full trust in my colleagues at the Fed and at the SEC and otherwise to actually supervise very carefully what is going on at the regional banks levels.
See, there's so many stories going on behind the scenes like that. Almost makes this stuff kind of boring.
The next question goes to Carlo Boffa of Politico. Carlo, please.
Thank you very much for taking my question. The first question, I want to ask that given the latest PMI and the tensions in the Red Sea,
like banks arbitraging the Fed,
that growth
they stopped it today.
In the fourth quarter of 2023, do you still stand by your forecast that you made in December that the Eurozone will avoid the recession? And the second question is again about the staff survey mentioned before. There was some direct criticism at you. And I wanted to ask, do you think it's fair? And how do you plan to address this criticism in the next years?
People don't like the boss, then fire them.
President? Thank you.
Thank you for your question. On the I don't know exactly what PMI numbers you're referring to, because the most recent PMI numbers are actually little indication that things are coming in place for recovery in 24. So if you have other PMI numbers that I'm not aware of, then let me know. But when I look at the composite PMI output, it's higher than it was the month before. If I look at PMI future output, it's north of 50. So maybe you have better information. Politico is usually very, very insightful in all sorts of things. But for us, these PMI numbers are small signal that having stabilized or stabilizing, we have the conditions for recovery that are coming into place. I'm not suggesting that it's going to pick up radically, but it's coming into place from what we see. I think I said at the opening of the monetary policy statement, I just want to make sure that anyway, you will find it, but I'm not going to waste everybody's time with that. But we recognize the weakness of growth, and that weakness obviously applies to Q4. Now, there are multiple ways to define what is a recession. The technical terminology of 2 quarters in a row that are negative is one way to look at it. I remember discussing that with my colleague and friend Janet Yellen, where the US had 2 quarters in a row that were negative, And when I said, well, Janet, you must be in a recession, and she said, what? With those employment numbers? Forget it. We are not in recession. So I think we have to be attentive to all sorts of data.
All right, here it comes, maybe, huh?
Of the economy. On your second question, look.
You guys doing all right? Everybody happy?
As far as I'm concerned, I am irrelevant. As long as I deliver on leading this institution of talented people, not just economists, talented people who are driven to do their job and to deliver. The rest, me as a person, irrelevant.
The last question goes to a participant.
She's so cool.
Via the video.
You don't like me? F you.
From Corriere della Sera.
I like it.
Over to you.
So it's on screen now.
Well, I gotta go. I got a big meeting coming up. How far off is that? Yeah.
Where is
all
he?
right.
No, okay. Probably you can hear me. Sorry. Okay. Yeah. You just
here it comes.
Actually, this question, but Italian Minister Giorgetti declared a few days ago that monetary policy may be bringing about a recession in the euro area. I was wondering whether you have any comments, not so much on what Giorgetti said, but on these kind of concerns that one can hear here and there. And the other question is, on wage settlement. From what you said, I understand that probably the ECB wants to see wage settlements data that have to do with the first quarter, which probably you will receive from Eurostat at the end of April. Am I wrong on this?
You must have checked that very carefully because I received the same question from multiple Italian journalists. So you must be feeding them.
Ooh, that's a bit of a slap.
I would simply repeat what I have said. So I partially responded to your question. We are looking at all data, not just wages. Huh?
Ooh,
and in terms
all
of activity,
data,
what we're seeing is
all of
data, that is weak. You know, you look at industrial production, it continued to decline. You look at retail sales, it remained weak. It didn't decline further, but it remained weak. If we try to look at PMI numbers in particular, as I just said, we are seeing some encouraging numbers, whether it indicates stabilization or slight uptick. This is, it's very early sign. People can challenge PMI numbers, and they do. But at least we are seeing numbers that are either to the upside or stable.
Yeah, but they're still below 50.
As I said, we are looking at all sorts of data. We are looking at wages a lot for the reasons that I have explained. And because there is a catch-up process that is underway and that should run its course this year, probably next year. But we're looking at lots of other things. So, I would not draw any conclusion from a date of publication. You have to appreciate that, yes, we are data dependent, but we look at multiple data, wages being a key one, of course, profit unit being extremely important as well. Energy prices will continue to matter enormously. They've been, taking us up and down, and they are volatile and moving almost as we speak at the moment, given the geopolitical development that we see. We will be looking at fiscal very carefully. There are commitments on the part of member states' governments that they will be withdrawing the energy support. We will be very attentive to that, and we will see how much fiscal consolidation there is relative to the budgets that have been submitted. So it's all this data that we will be looking at, and you're correct about the date of publication.
Thank you very much. This closes our press conference. The next press conference is scheduled for the 7th of March, and until then, all the best. Thank you.
All right, that's it. Yeah, and I gotta go too. I got a meeting, and then today at 4 p.m. the swing trading group and the day trading group is meeting at Investor Boot Camp. And then today I have some nonprofit work I'm doing. And then tomorrow I'm doing some nonprofit work, in particular a board meeting. Yep. So lots going on. It's a busy day. It's a busy week. Life is great. Life is good. Life is beautiful. If you're new to this channel, why don't you consider subscribing? I've been doing this for 20 years and you just found me? Sweet. There's literally 5,000 videos associated with my work on YouTube. Hang on, I gotta kill that page. Browser source, where is it? All right, now it's gone. All right, so yeah, so imagine you just found me, but there's 5,000 videos on YouTube associated with my work over. I've been doing this longer than YouTube has even been around, so that's pretty interesting, huh? So right on. So again, at Investor Bootcamp today at 4 p.m., we are planning all of next week. We could do just a quick zip around the euro and see how it's responding now that the meeting is over. Kind of move things around a little bit. What's going on? Directional trend stuff going on. I'll move this back up to there. Well, I guess I could just go window tile. All right, so very interesting. Definitely weakness followed. And then boop. Okay, so now we have that little volatility at the end. Makes sense. I think you guys were right. You said that you didn't expect interest rates to be cut today. That's great. And then I showed you that, well, that often leads to what happened. So kind of nice to have that. So I will see you later in the day, I am sure. Tomorrow is a Friday, so I will not be on this YouTube channel. I will be on the FX Street YouTube channel. So maybe I'll see you there tomorrow. Maybe swing by. It's youtube.com/FX Street. 8 o'clock, I believe that is to be truthful. Peace on earth. May the pips be with you. May your profits be above average. I will see you soon. Have a good one. You hear?